All right, all right. Good afternoon. Good afternoon, traders. Hello, Michael. Good to see you, sir. Back and settled in from your travels, I assume. It's good to see everybody. We're going to give it a normal minute or two to let the trader standard time, a couple minutes late. Hey, Bob. Good to see you. All right. Well, interesting week. Inflation fell short of expectations. Market's adjusting to that. We'll see by how much. I think we're actually showing a good amount of resilience here, to be fair. But those are the questions we're going to be asking as we start to preemptively look at what our posture is likely to be on Sunday. And again, we know that there's times where we misassess, but we'd like to have a sense because I think that informs any last hour decisions you're making, right? In fact, if I were you, I would do this maybe even an earlier than now, hour earlier than now, where you actually go in and you create a habit of assessing so that you're like, you know what? Yeah, things are a little worse. I think without without having looked at it yet, there's a good chance we drop a little bit, 6.5. Okay. That's not terrible. That's not like, oh, what am I gonna do? So that might help. Knowing what you're thinking the score will be as it sets the tone for next week will also set the tone as you decide what trades are you going to carry over the weekend. And it's a 3-day weekend, mind you, right? Saturday, Sunday, Monday's closed, no meeting. No meeting on Monday. Don't come. I won't be here, but I will see you on Tuesday morning for our market open. All right, we're all here. Let's go. We have enough. Welcome to the Market Watch Group Weekly Market Wrap. I am Scott. The time is now. Here are the disclaimers. Educational, illustrative only. Right? We are not investment advisors. You know the drill. You'll see a new set of disclaimers for the alerts when they come out. You got to keep the lawyers happy. If the lawyers aren't happy, nobody's happy. Here's today's agenda. We'll analyze today's market. Interesting day. We'll revisit our posture. What do we think? Talk about our mindset for anything carrying over the weekend. If we're going to carry it over the weekend, what are you going to do with it? How much more urgent is the decision come Tuesday? We'll talk about what we're looking for next week by taking a quick peek at the economic calendar. We'll take a look at our trading or our shopping list to see what looks to be developing. We'll check in last time. It is you've got 3 more days to be setting routines and starting to evaluate now that you've got your first 25 trades at least, or you're already a record keeper. Now you're making sure that you're analyzing those numbers on a regular basis. Anytime you can use data to inform yourself about trading, do it. Let data be your guide. Yeah, data, not emotion. Okay. So we'll talk about that analytics next week. We finish our first pass. Just like that, you blink and if you were just starting with us and you just for the very first time, went through and started this, you have your first pass of the trading plan. Some of you should have just polished, beautiful, polished, and you might be thinking, oh, it's not as good as I want it to be, Scott. All right. Make the commitment. You're about to get another pass coming up here. So there you go. All right, let's get to it. Let's get to it. What are the markets doing? Back to negative. Interesting day. We started down, right? And then we just sort of recovered up. And then we bounced and recovered up a little more. And then we've dropped back down here. We're back in a negative. Bad negative? It's 0.29. It's not even 1/3%. The Dow's at quarter. NASDAQ and Russell, of course, are always a little more volatile. So we're going to expect a little more there. maybe a little than more, or maybe more than a little. I mean, NASDAQ down 0.6 and the Russell almost 1%. Oil, which oil and materials, it's interesting that as we get a couple of inflationary reports that are a little worse than expected, we also see oil break. You guys notice that? We see oil break and we see basic materials all of a sudden popping a little, and you're like, that's not great. Oil costing more and basic materials costing more do not help inflation come down. Right? That's just, yeah. And that's what you tend to see that more in the PPI, the producers price index. It's costing more to build things because it costs more to buy the materials to make things. It costs more to ship things because oil, right? Press says took one oil to trade today. I love it, man. I mean, as a trader, what do? We follow the money. If we see oil break out and pull back and give us an opportunity, follow the money. Amen. It's been a complicated week for the U.S. economy. Has been. It is somewhat complicated, right? Retail sales dropped, inflation ticked up. However, retail sales dropping for our March and April inflationary numbers is actually likely going to be helpful. You can't expect prices to come down if retail sales keep going up. That's a problem, right? We need sales to level off, ease up, let prices stabilize, come down. And so a drop in sales is actually not a bad thing as you forward look what we think is going to happen with inflation. Anyways, okay, what else? Stocks wobble after another hot inflation report. I like that. Wobble. That's not bad. Yahoo, well done on your title. Used housing starts see biggest drop since April. Oh, okay. AI hype is fading. Never, don't say that. Whoever wrote that article, you put yourself on a list. Watch out. Okay. Ooh, this is ominous. No soft landing. The U.S. economy is going to fall into a recession in the middle of 2024. All right. I mean, I'm interested in it's an opinion piece, of course. Here's the thing. We don't, if a recession is going to come in 2024 or the middle of 2024, what does that mean? Does that mean May, June, July, August? As traders, we've got to just let price be our guide. If that recession starts to show up, then we'll start to see institutions positioning themselves more defensively, right? Whether that's increased hedge action, buying more puts, whether that's shifting into the Dow and out of the NASDAQ and the Russell. Okay. We'll see it. We'll score it. We'll adjust. And if a recession comes, I mean, does that come with a bear market? Not necessarily, but at least a correction and maybe a deep correction, which is 10 to 15%. Okay. All right. You know, we put it on the radar. Press has a great comment. I love it. And that's the thing. Where else will we see it? He says it's hard to have a recession with job growth and increasing wages. Remember, one of the things that we're looking for at any given time is, does the jobless claims, weekly jobless claims, a lot of people get lulled into complacency, but we'll always keep an eye on that for what? If it cracks above 250, right? If we see a 3-week average in weekly jobless claims get to 270, 3-week average 270, then we're going to be like, oh, because that's the number that then the next month, all of a sudden, when we get a non-farm payrolls, it's a negative number, and the market's like, oh shit. But it's like we already started to get a sense of that. That's why I look at, a lot of people are like, why do you even look at the weekly? It doesn't even change that much. And because it's that first indication for us, right? So we always want to make sure we're prioritizing something that I don't want to be caught off guard when the first non-farm payroll goes negative and the market has a violent reaction, we should probably already have some puts in place, be out of bullish trades. There's a lot of things that we think are going to develop in advance of that. So that's why I say I don't care if a recession comes, right? We'll make as much money as we can until that time, and when it comes, we'll adjust, adapt. If it turns into something bearish, hey, there'll be opportunity. We'll trade bearishly. Fine, okay. It'll be interesting, right? We literally, as a group, saw the market go negative, and it was like minus 0.25 on our market posture, which is neutral. It's neutral. It's not even negative, but it is like the first time that the actual empirical score was negative for 1 week, and then it turned back around. We've been bullish, or to some extent, or neutral when we saw it in September, October. We definitely got more neutral pretty quickly. It'll be interesting to see how that looks, right? And what we do with that. Okay. Questions, comments, concerns. Real quickly, let's hit the posture. Here's what we are now. Where are you? Come across. Here's what we are now. 7. Very strong. Been strong. Is it problematic if it drops 0.75? No. No. If it drops 1.75 over 2 weeks, then we're like, ooh, I don't like that. But for now, let's just see what we think as we go through the components roughly. I drew like a new potential trend line, and you can see we got right to that new trend line. There's nothing that's going to change this. This is going to stay this score until like right here. We could literally have a correction, not a correction. That's 30 points, 30.6%. Consolidation, a mid-sized consolidation, 6%. No problem. That sits my market, my long-term trend score won't change during all of that at this point. So that looks fine. That's not going to change. It is what it is. Let's go look at the 6 month. I mean, we bounced, we had a higher low. It now looks like it's pausing, but this is not. Everyone's like, oh, it could be a double top. It could be, but right now it's just pausing at resistance. It's pausing. If you look at your stochastics is actually looking for this possibly to still go. We may just pause here, like right here. Very similar, right? You can see it went up and then it paused. And then it sort of paused again and then boop, boop, boop. So, again, if you're just anticipating that, but right now, what do I see? I'm in this trend. We bounced off the bottom of this trend. I'm in it. This trend is holding. This trend is now what I'm scoring, which I have as a 2. It's going to stay for me. It's a 2. It's a 2. Volume. Volume is going to change. Whoops. Volume is going to change. Which way? Down. It's going to go down. Here is where we are now. So you can see I've got a buy day, a sell day, a buy day, a buy day. 4. I've got 4 buy days, 1 sell day, and then nothing, boom, sell day. Sell day. We recovered, but we recovered on less than average volume. So the sellers disappeared, but it wasn't like the buyers like just smashed it. They're like, okay. So what do I have now? I have a 4-2. I have a 4-2, and the newest is this. These are not going to last, right? Beyond next week. After next week, so I'm gonna drop it to a 0.5 after next week. What is it? Then I have negative, positive, positive, negative. Now I have a 2-2. I still go tie goes to the buyers, but it'll drop to a 0.25. So unless next week we get a buying day coming in with some volume, the volume is starting to ebb out. Now remember what I said. At some point, when we have a strong enough trend, we don't need volume. I don't need to have volume. With above a 3, yeah, this is probably going to pull itself back to a 0.25 or a 0, but we'll still maintain, I would say, above 6 score. So it's just something to be aware of as we watch this. That's not, the volume decreasing is not weakness. It's just that aspect of it is not really becoming as relevant because an established trend is in place. Major market, I would expect to stay the same, possibly. Now, why would I say this? Possibly go up. Could it get to a 1? What would make it get to a 1? Because the SPY, let's get back out to a 6-month. Or I mean, the IWM bounced off the 50 and made a higher high. That's pretty strong, actually. And even today, it's down, but it's just kind of holding inside. I don't know. You guys tell me what you think, but I think the small caps still are showing increased interest. If this is adjusting to like, oh, things are not, the Fed may not go until June now. Speaking of, real quickly, let's take a look at that. Let's start at our normal order. We really only care about March, May, and June. But when we look at March, you can see we're, basically 9, 10 to 1. A 90% probability of nothing, no change. Then we go to May. This is the highest it's been for a probability of no change. It's 2 to 1 right now. 2 to 1 in favor of no change. This is where I've been expecting. So I'm in that 31. I still think maybe we get that surprise. I say this. It's been a long time since we've had a Fed that will give a surprise. Bernanke would sometimes go negative surprise, sometimes positive. You throw a bone. You throw the market a bone. We don't really get a lot of that these days. So okay. June. That's the first time we have in favor. So whenever you hear people say, oh, the market's pricing this in, that's happening right now. This is what we're pricing in. We're now pricing in that we don't expect at a better than not probability the Fed to cut until June. That's the 4th meeting of the year. June. Bob says, I hope you're right. I mean, honestly, in the long term, better. Yeah. Would it be like a fun little ride if they gave an early bump? Yes. But in the long term, where you're like, hey, do we have like a sustained where we get a nice 3 to 5 year bull market? Things are just better to get that inflation under control. Press says June or July at best. It's crazy speculation when everything's coming. It is coming in hot, but it's coming in close, right? Like again, if they get to 2.5 and if it gets to 2.5 and they sniff at all any weakness in the economy, for sure that'll be the end, right? And it'll be interesting what they do if we get close, 2.7, 2.8, and then all of a sudden, like, bad jobs report. So I don't know, right? Everyone's like, oh, the Fed should have done this, should have done that. It's like you're managing such a behemoth of an economic landscape, right? I mean, I don't envy that task at all. It's the Titanic is nimble compared to what you have to work with the US economy. Okay. Back where we were. Sectors. Remember our sectors of concern where we're discretionary. Discretionary is holding up. And we added a 6th strong sector in growth. Now, some people are like, is healthcare growth? So healthcare, when I first started in trading, healthcare was definitely more defensive. But since, the passing of Obamacare, it had a real shift in the way that the healthcare sector moves and is viewed. And there was an entire year, a bullish year that was led by healthcare. So I'm like, it's a growth. And you can see it here. Look at this trend, strong. So add that. Definitely, we're in a broad market. That's not in danger. That's definitely a 1. Lastly, what do we have? So we have a 1/4 point drop, in my opinion. And here's another 1/4 point. Right? Here's another 1/4 of a point. So we maybe even a half a point. It had a higher low right here and a higher high right here. It confirmed this was a higher low and then it spiked up. Okay. So actually, yeah, I think it might be a full half of a point drop for me, which would put us at we lose a quarter here, lose a half here, 0.75. Yeah, I would say 6.25 for me. Thoughts? What do you guys think? Now, is that panicking? Is that no? Um, even though I did have to knock it a quarter of a point because it's a higher low and a quarter of a point for a higher high, I also have to recognize it only spiked up to 18 and it already has come down to 14. It was very, very short lived in that area, and that's not that big of a spike. It's really not. And it sets up the good probability or possibility that if we have, if from here it does spike. Now we don't know for sure. Right now, it's still coming down. This is still coming down. We think this could still keep coming this way, but if and when it pops up, if it only pops for a couple of days, then all of a sudden we have something that we can latch onto and provide some extra confidence for a bullish move. So I'm okay with this. This is not in any way or shape or form that bad. And in fact, even though we're up on the VIX right now, you'll notice, and you might ask, is this a hedge? No, right? Because it hasn't turned. Right now, it would have to come up here. It would have had to have popped up here. Then I'd be like, yeah, I'm probably going to hedge. This looks not good. That's not what's happening. We're actually in a position that this thing still looks like it's coming down. It didn't even overcome this body. So on Monday, if we get a bullish day, it's going to keep coming down and we're just going to still be waiting, but it's got a ways to come. So I am concerned about a hedge. I am definitely concerned still about a developing hedge here. Press says definitely feels like the market's adjusting to reality. Reality seems to be pretty strong. I agree. The reality seems to be pretty strong. Could there still be one little shakeout? Possibly. Like I said, 6.25. Oh yeah, not Monday, Tuesday. Market's closed. I'm going to say it every time though. You'll hear me say it again. But yeah, no market Monday. We're meeting Tuesday. No meeting Monday. Thanks, press. Okay. So, is there a cause to carry the trade? I would say right now, if I got a hedge signal, I would be hard pressed not to want to take profit and not carry something through the 3-day weekend. But I'm not getting a hedge signal, so I think there's definitely a good probability that you carry something through the weekend with only. I still have some hedge from here. This hedge is still on. It popped up. I actually took a little profit in a great place, but the rest of it's come back down, giving it basically all back. But at this point, it's still viable. And if it goes, I will keep that first part and add a new one here. Yeah, great. Okay. If things drop, I'll have something in place. If not, I'll wrap it up quickly. We'll see what happens. Let's get to the watch list, shall we? Boom. Tradable. Apple's a little more concerning now. I mean, we're still above. Yesterday, I thought it was still okay, and we're still in yesterday's range. But it's got to be pretty soon, and I'm losing confidence that this thing is viable. I mean, I always want to root for Apple, but that doesn't bode well. We'll see. AIG trend is intact, but there's really nothing there now. If it pulls back towards the 50, maybe we get a nice sold signal at the 50 like we did back here. Love that. Good opportunity developing. AMD. Yeah. So that is not one I'm carrying through. Oh, AMD. I got a good entry on Wednesday, but I don't like this to carry through the weekend. Seems like it's hitting some resistance. So I pulled slight negative. I thought I was going to get break even. Slight negative. Anybody else trade this? Take a stab at it. Gave us I thought false start. Now I'm going to catch it. I didn't bite. Oh, AMD. Amazon still setting up. I think it's setting up. I'd trade this on Monday if it turns. It's expensive. Well, it's not that bad. 170. We popped on earnings and then rallied a little more, new high. We've now pulled back. This was the selling cycle, not much, no volume ever for the sellers. It's sitting here, and what do I need? I need it to basically just get up there. Maybe the body of the red candle, which is the high of today. That happens Monday or Tuesday, I think we're viable. And where is it? Consumer discretionary. And it's leading the consumer discretionary acceleration. So there we go. AXP. I mean, this could be your flag, and this is, you can see the stochastic has turned today. Heiken Ashi is looking viable today. Whether you're in it or taking it, financials still look viable, in my opinion. What's everyone trading? What are you carrying through the weekend? Boeing, nothing. Still nothing there. It's got to break it. Buyers have shown nothing but like a weak, feeble attempt to be relevant. It's not there. BK, nothing. IP, okay. But don't let me forget, I'm superstitious. I'm going to try to get it around the alphabetical order. So don't give me anything A or B. Caesar forward. BLDR, I think it's got earnings. You're not going to do anything with this now. BX. So I actually took BX out here, and then it popped back up. Now I'm thinking it's still gonna maybe consolidate. I would rather wait for this to happen. I caught a little piece. Took some off at the resistance there, and then stopped out of the rest for good profit, small profit, not bad. IBM, Pfizer, and Toll Brothers. Okay, those sound interesting. I'll pop those up. City. I'm holding it. I'm holding it. I think it's viable. I think it's pausing. It has a tendency to pause and then move. You can see back here, it went and then it paused, and then it took off. Yeah, I think it looks fine. I will tighten my stop though. I will get my stop up a little tighter. Just under 54. Taking risk out of the trade whenever we move the stop in that regard. Caterpillar's viable. Today it's kind of stalled, but I mean, really, it's just a small stall. It's still a viable trade. If you like industrials, Capital One, viable. And if you wanted to jump in late, move to a Heiken Ashi, put a stop, get ready to trail it, absolutely. Those are viable. There's momentum there still. I mean, we'll look at the resilience the market's showing in spite of a slightly hotter than expected inflation report. We have to acknowledge that resilience in the market. Even though the posture is going to drop 625. Remember when we're like, whoa, we hit 6. We can't be like, oh, we dropped to a 625. Now what? The world is ending. No, it's not at all ending. COP a little sideways. Costco. Okay. Costco's, I think, on deck. It's consolidating. I don't think it's turned yet. You could try to enter. What I said with Costco is I'm waiting for a Heiken Ashi. That's not it. I need a momentum candle. If I get this momentum candle, something like this on Tuesday, if I get that momentum, then I'll enter. So it's kind of, if you look back here, you can see not quite certain here. If we get that candle, so I'm gonna make sure it's going up. Then I'll get in and I'll put my stop below the bottom of that candle. I think it's a fairly aggressive stop, but I feel more comfortable jumping in like that. If the market goes, I want it. If it doesn't, I want to be out pretty quick. Yeah, so I think Costco's setting up for sure. That might even be one. That might be Monday's. That might be Tuesday's alert. I like that. We'll see. Crowd consolidating. this was crazy. This was a nice little pull right here. This made some money. It gave it back and then jumped, and then it popped a little bit. And now it's. I need to think we need to be patient. CSX patient, Delta patient, DHI patient. A lot of these are just kind of moving sideways. So be careful. What are you looking for now? For me, this is all still one of the. This is the same move. If it holds support at 36.5 and turns, that's viable. DraftKings, interesting after earnings, gap down, rallied back up. Ford looks like it's setting up. This looks like actually what I would consider the first test after it never really, it did a cup, but it almost like didn't quite get there. And then bam, it's up here now. Is that a flag? I would still consider this a flag, press. Yes. Nice recognition right there. You can see, here's my pull, right? Here's the flag. Okay, so you can see we had the pull happened there. It happened there again. 3, can I ask for 3? I think so. I mean, that's, if you're an Elliott wave person, three waves positive tends to be what you get. So looking for one more here. I mean, we're getting what? This is about 1140 to 1290. That's about $1.50. So if we're catching it around here, and we won't know till like this, maybe as it comes out of that, what's my target going to be? Probably 1380. I mean, I'll have a pretty good expectation for a bullish move there. I'm definitely watching Ford. Okay, I got to speed up a little bit. Fastenal, iffy, but there's momentum there. I added GBTC. We'll watch Bitcoin as something. It's overextended now. I don't know. Anyone trade this? Anyone interested? Let me know. GE, God, that thing ran. Overextended, but it ran. Gold, sideways to slightly down. Google, it's got to hold up. I thought it could hold the 50. It's a little below the 50, but it's still holding yesterday's low. I don't know. We'll see. Home Depot, earnings coming up. IBM. So I got out of IBM. Now it's moving. We'll see. We'll see. Hood. Let's take a look at that. Press. Hood. Oh, Robinhood. That's right. Nice. Okay. Popped on earnings. Still looks pretty strong. I like that. Financials. Good. IBM. If you got back in, I think it's worth staying in. Or if you stayed in, it's worth staying in. I got out. I liked it. Then I didn't like it. I took a small loss. I did not re-enter. So there you go. Some of you may have. I'm not saying it's not valid. I just didn't. Would I jump in before Tuesday on IBM? I think you could. I mean, again, look, anytime you're asking that question, you guys know the easiest way to go with this. This could have been it. This could be it now, where you say, I'm going to jump in now, put my stop right underneath this candle here. 184.73. You're at 184.50. You're taking 3 points of risk on IBM. It's pretty tight, but I think it's a valid stop. So 3 points of risk. Well, if I need 9, where does that put me? 196. I mean, yeah, that's not even, that's just retesting this old high. Do you think it could retest that old high? Stop here, target at the old high. That's a 3-to-1 trade. Bam. Bam. Okay. Okay. All right. What else? There was another one in those IP. Michael thought I was going to break my superstition. No, sir. Oh, yeah, that looks great. That's a nice little flaggy type pattern. It did a little V reversal. The only way I'm going to like it under its 50 if it does something like this, where V reversals and then higher low. Bam, that's a signal. I know I'm saying bam a lot. I don't know why. It's Friday. Sorry. I'll cut it out. I apologize. I feel like I need to have my telestrator. I'm John Wooden. Okay. It's turned, valid. Yeah, I'd carry that. That looks great to carry through. Where are we? Intel. If Intel makes a higher low, I'd consider it, but it's not my favorite for chips. IWM holding up, JPM holding up, Las Vegas Sands, it moved a little more, but it's a little overextended. Meta looks like it's pulling back. I want to be patient. Same thing on Microsoft. Be patient. It looks like it could find some support somewhere between like this 400, 402 level, 403 level. I like that for next week though. Netflix, it moved. It was hard to catch that signal, and now it's already engulfing. It's like, wow, that was fast. That was fast. Nvidia grinding along resistance. Car. A lot of these things look like they're kind of hitting some resistance. So some of these I probably would not be as inclined to hold through. This is interesting because your stochastics is trying to turn, and you've got this big bearish engulfing on slightly above average volume there. So be careful. Ross Stores looks bullish though. I think there's some mixed signals. If you have things that look bullish, take some bullish trades. If you have things that look like they're hitting resistance, you don't want to carry it through the 3-day weekend. Well, that makes sense too. Woo, doggy, look at that. Look at that give back. Down 19% today. You want to know what the textbook picture of a bearish engulfing pattern looks like? That is it. Madness. That was insane. How fast that gave back. That was a shark frenzy. SPY. Yeah, again, it's definitely a pause and a concern, but there's nothing confirmed about this yet. So don't start thinking any pieces of the sky are falling. TPR, man, that thing did break out of that. We said that could be a flag, and it turned out it was. I just didn't feel comfortable trading something like that with it being new to the watch list. That was my concern. UNP gave a little bit of a false signal. I did not take either of the railroads. I'm a little concerned about the railroads. Here's the VIX. The VIX is above yesterday's body, but not the high. So I'm saying it's still not convincing yet, but it's close. It's close, and that could turn into a hedge signal even as early as Tuesday, and we'll talk about that for sure. WM, strong. Walmart. Earnings are coming up. Here's XBI. Pushing some resistance. XLB. Materials there. You can see what I'm talking about. When it broke to a new high, it was going sideways. You know, we look for these consolidations, right? And oh, where's my drawing tools? Yeah, we came down and it broke, but then it stayed in its consolidation. But then all of a sudden here, it kind of broke again, and you're like, wait a second, there it is. It's definitely popped out. And at this point, I would be thinking, I'm looking for this thing to bounce. So that's showing a little bit of a surge in materials. That could definitely lead to inflationary pressures. So we want to be aware of that. Communication services kind of pulling back, but still looks bullish overall. Energy, there's that break. It did it here and it never really pulled back, and now it's trying to break again. So there's definitely some bullish pressures in the energy and therefore as a subsidiary oil markets. Financials still look strong, but a little overbought. We'll see if it can continue to rally. Industrials, very similar. They look great. They're very strong. Technology still looks strong. Nothing has shown us anything that says, oh, watch out. Staples has surged a little, but I don't see that as a defensive surge. I see that as being bullish on Walmart and Costco. Utilities, it's not surging. It's not downtrending, but I would say, you know, if I saw, let's say all of a sudden it broke out to 64, pulled back, and then started to bounce, that'd be concerning, something like that. We don't have any of that right now. That's why I'm going to still be a 6.25. I'm still going to say I'm bullish, and I'm still going to be looking for bullish trades. XLV looks bullish. XLY, it bounced. It hasn't broken above this yet, but it's pausing. Still could definitely get up here. If it gets up to this point, I'd say you know, the concept of a trend is back on, and looking for something like that to continue. All right. We're about to run out of time. Real quickly now, remember that this week we are on Section 7. Section 7 is record keeping. Your trade log should have a minimum of 25 trades. Hopefully it's your last 25, but get at least 25 so that you have one completed column on your dashboard. That'll give you even one column will absolutely inform what you should be thinking about with the next set of trades, which is what you'd be working on next. 2 columns informs the third, etc. This should be speaking to you, should be telling you stories, talking to you about strengths and weaknesses, what you need to do better. Then you're going to be trying to figure out what aspect of your plan, what rules, what routines lead to that, what that aspect that needs to be better. And it becomes a methodical and process of improvement. So get this in place, a minimum of 25. Press, I think, has gotten his first 100 done. I think Steven's gotten his first 100 done. You get that first 100, and everyone's like, now what? You process it. You learn from it. You start a new sheet. You always can pull up the old one. When you pull up the old one, you might be, you might have a few notes about the trend, but you're essentially kind of looking at the 4th column and the cumulative. That's the most important information that you carry forward with you to the next spreadsheet. Okay. That's record keeping. Questions, comments, concerns. How's everybody feeling? We got some negative inflationary data, and we're processing it, I think, in a quite a resilient way. I say that as I recognize my posture will drop, but it's dropping by 3/4. It's nothing untoward, nothing too bad yet. Oh, I have messages. I didn't see them. Michael says he can't believe I'm superstitious. Of course I'm superstitious. Of course. Paper trade, small loss, second trade. All right. Love it, Sandy. Love it. Keep it up. Paper trading is trading. It's preparation. It's experience. It's all getting us to the same place. Okay. Going forward, this for the schedule. No trading or no market Monday. So we'll meet Sunday, market posture, regular time, 11 a.m. Eastern. We will skip Monday altogether. Enjoy your holiday. I hope you're doing something fun. And then on Tuesday, we will have our weekly market open. And on Tuesday evening, we will have our trading foundations. Trading foundations is really starting to come to a close. Where are we at here? Let's see. We've got record keeping and analytics. Oh, that's timely. Record keeping and analytics on Tuesday. Analytics on. Okay, so it's all about record keeping and analytics on. Oh, you know what? We might turn one of those into a workshop with somebody's results. I got to look at that because looks like there's some overlap. So maybe the second day, that'll be Thursday the 22nd. That will be a workshop day. Then the following week will be post-trade assessments, and then we'll have a final Q&A wrap-up, and then we move to options again. So not much left, and then we're back to options. I can't believe another pass all the way through. Amazing. It's great to see everybody. Enjoy your long weekend. I'll see you Sunday, just before breakfast for me. And other than that, have a great weekend and happy trading.